What's up, millennials? Today we're going to take a look at one of the safer SPACs, which is BarkBox. And BarkBox is a company that focuses on products for dogs. This company is going to be acquired by the SPAC that's currently trading under the ticker symbol STIC. Now, before we start, if at any moment you don't really know what I'm talking about, please check out my full SPAC guide that I released a few months ago. The link to this video is going to be somewhere in the description, and today we're going to be taking a look at method number 2. Also, if you want access to the Excel sheet I'm going to be using today, you can join our Discord for free by going to nesami.com/discord. Then you can leave your name, leave your email address, and you're going to get access to it. And of course, as always, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm certainly not a financial advisor. So don't copy my numbers as is, but always come up with your own multiples, your own numbers, to come up with your own fair price per share. So as I've mentioned before, BarkBox is a company that is focusing on products for dogs. And these kinds of products are all kinds of products, basically food, dental solutions, toys, but also beds, leashes, collars, etc., etc. And BarkBox is working with a so-called subscription model. So what they do, what people do, is they can get that monthly subscription, and then every month they are going to get a customized box with all kinds of toys and treats for their dogs. And by the way, with regards to the merger date, we don't have a date just yet. If we then take a look at the pro forma valuations, we can see that they started out trading at $10 per share, of course, which is very common with SPACs. Almost all SPACs do that. And we can also see that they are going to have almost 202 million shares outstanding after the merger. It's going to be a little bit less, 201.8 million shares, more or less. So if you take that share price of $10 per share and you multiply that by the amount of outstanding shares after the merger, you're going to arrive at a pro forma market cap of a little bit more than $2 billion. Now, we can also see they have an amount of cash on their balance sheet, $490 million, and an amount of debt of $115 million in debt on their balance sheet. So if you take that cash, 419 minus 115 in debt, then you're going to have a net amount of cash of $375 million in cash. And then what you can do is you can take that pro forma market cap of a little bit more than 2 billion, you can subtract the amount of net cash, 375 million, and then you're going to arrive at this enterprise value more or less of a little bit more than $1.6 billion in enterprise value. And when we hop into TradingView, we can see that currently they are trading at $10.17 per share. So not a lot has changed, of course, just a slight increase of the numbers. We can see that, yeah, the pro forma market cap is still a little bit more than 2 billion and the pro forma enterprise value a little bit more than 1.6 billion. But that, of course, is the pro forma enterprise value. We want to know what a fair enterprise value is. And for this calculation, we need basically two numbers. First of all, we need to know the revenue of a certain year. And then we are going to apply a certain range of multiples to that revenue to arrive at that fair enterprise valuation. So two numbers we need. First of all, the revenue. Let's take a look at the revenue. And today in this video, we're going to take a look at the revenue of the year 2022. Now, first of all, we can see that in this page on the investor presentation of BarkBox, we can see that they already have a solid amount of revenue. In fiscal year 2018, we can see they had $149 million in revenue, more or less. If we scroll forward, in 2020, they had about $224 million in revenue. And in the fiscal year, that is very important, fiscal year 2022, they are expecting to have $515 million in revenue. So we can see already that this company has already a proven track record, which is right now what I'm definitely looking for in a SPAC, because that's a little bit safer to play. Now, the slight problem is that those are revenues for fiscal years, but we want to know the calendar years, because the calendar year revenues is what they use to do their valuation benchmarking. So basically to compare their multiples with other multiples of competitors like Chewy, Freshpet, and Trupanion. So in order to get that calendar year revenue, we need to do a slight calculation, because the calendar year in the case of BarkBox is not equal to the fiscal year. So that is a little bit annoying, but well, it's not going to be very difficult. Because here we can see, according to the investor presentation, that as of December 15th of 2020, so already a while ago, of course, they had a EV to sales ratio of 2.5x. Now, if you go back in the charts, you can see that on December 15th, they were still trading at $10 per share, or they were not even able to trade. So yeah, they were at $10 per share. So that means that on that date, on December 15th, the enterprise value was $1.643 billion. Okay, so if you then take into account that the EV to sales ratio was 2.5x, we can now take that enterprise valuation, we can divide it by 2.5x, and then this would be the revenue of 2022, the calendar year 2022. I hope that makes sense, but that is the number we are going to be using. So $657 million in revenue. So we now have that revenue, but now we need to apply a certain range of multiples to that revenue to arrive at a fair enterprise value for BarkBox. And we can see, as I've said before, that BarkBox is comparing themselves with Chewy, Freshpet, and Trupanion, and also with the multiples of these three companies. Now, back in December 15th, the multiples of these three companies are shown here in the investor presentation. So 3.7x, 10.7x, 5.3x. Now, the thing is, whereas the EV to sales ratio of BarkBox hasn't really changed because the price per share, of course, of BarkBox is still around $10 per share, the EV to sales ratios of Chewy, Trupanion, and Freshpet definitely have changed. So we are going to take a look at what kind of EV to sales ratios these companies are trading at right now. And for that, we're going to be using Yahoo Finance. Now, this might not be the 100% most accurate numbers, but it is just to give us an idea of the EV to sales ratios the company are trading at right now. According to Yahoo Finance, we can see that the EV to sales ratio for Chewy is about 4.5x, for Trupanion it's about 5.2x, and for Freshpet it's about 21.2x, which is quite on the high end, of course. So you can see that on the low end it's around 5x more or less. So that is the number that I've come up with for the low end of my range of multiples that I'm going to be using. And for the high end, I've come up with the number 8x. So it's a little bit subjective here. Maybe you think this range of multiples should be higher. Maybe you think it's going to be lower. So that is a little bit up to you to decide if you think that BarkBox deserves a higher multiple compared to the companies Trupanion and Chewy, and that it deserves a lower multiple compared to the company Freshpet. So if you have all of these numbers, the revenue and also the range of multiples, you can then let the Excel sheet do the work for you. Because what it's going to do is the following. It's going to take that revenue of 2022, calendar year 2022 in this case, and it's going to apply that revenue multiple of 5x on the low end to arrive at a fair low enterprise value of 3.3 billion more or less. And it's also going to take that high multiple of 8x to arrive at a fair enterprise value on the high end of $5.2 billion. Then it's also going to calculate the midpoint valuation for you, which is going to be around 4.3, which is basically the average between the low and the high valuation. So those are your enterprise valuations. But we, of course, want to know what a fair market cap and a fair price per share is going to be. To arrive at a fair market cap, what we need to do is we need to add back the amount of net cash to arrive at that fair market cap. And in the beginning of this video, we said that BarkBox is going to have about $375 million in net cash on their balance sheet after the merger. So if you take those market caps, or if you take those enterprise valuations, of course, and you add back the amount of net cash, you're going to arrive at these fair market caps. So for the low end, that is about 3.6 billion, for the midpoint valuation 4.6 billion, and the high valuation 5.6 billion. And then you have these market caps, and then what you can do to arrive at a fair price per share is to simply take those market caps, divide them by the amount of outstanding shares after the merger, which we said in the beginning of this video was going to be 201.8 million shares outstanding. So if you do that, if you take those market caps, divide them by the amount of outstanding shares, then you're going to arrive at these fair prices per share. So for the low end, it is $18.14. For the midpoint valuation, $23.02. And for the high valuation, $27.90. And just a little side note here, because we of course have been looking at the numbers of 2022. Some might say, well, don't you need to discount these back to 2021? Well, in this case, that's not needed because we have been taking a look at the multiples of 2022 for all of the companies. If you would have taken the multiples of the other companies, so Chewy, Freshpet, Trupanion, of 2021, and then you would apply that to the revenue of 2022 for BarkBox, then yes, we would have needed to discount that back to the present, but right now it's not needed because all the multiples are from 2022. So based on these calculations, it looks like BarkBox currently is actually undervalued. Now, of course, don't trust me, verify me, always check if the calculations are correct, if the numbers are actually correct too. And keep in mind, we have been taking a look at assumptions, so we've taken a look at a predicted revenue number for the calendar year 2022. We've applied a certain range of multiples. Maybe you believe that should be higher, maybe it should be lower, so that is up to you to decide. And do keep in mind that if you change one of these numbers, the entire calculation is going to change and the fair price per share is going to change as well. So I'm looking forward to hearing from you as well. Do you believe this range of multiples of BarkBox is on the high end, on the low end? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.